So as a trader, first and most important thing is, okay, what kind of a day to expect? Even if you're thinking morning after trend day, how about the idea of inside day? That's also a player in our mind. So yesterday's 61 and a half, that laid low, important support. Then the next support, one by one, step by step, the 62 and a half area, the 63 and a quarter area, and now obviously just beneath us at just below 65. So one by one, these need to get broken and get beat for the shorts to have any say in what's going on. And likewise, if we look back at yesterday's ideas, first things first, you got to start getting back up above the middle, and any subsequent rotation that was a break. So for example, here's one right here that was a break, and that's basically what we said. Let's use that resistance at the open today, right? 17 and a quarter. So put a point or so behind the middle and call that resistance. So step by step, that's important. And then if we get up to test that, obviously yesterday's angel that broke at midday and gave us the afternoon sell-off. So this is a reaction to that trade. And as such, we want to know where these important levels are. And I want to see them on a chart. It's just not a number on my spreadsheet. I want to see the bar. I want to look and say, okay, these traders that are in this trade, until this gets broken, these traders are going to try to get up and try to take out the high. And as it migrates back towards them, depending on what type of trader they are, they're going to scratch the trade so that there's no loss, because they're already up a couple of points. Why would you suffer a loss on that trade? Doesn't make sense unless you're a big boy saying, who cares? I'm averaging in. I think as long as I average in between 60 and 65 today, I'll be fine. I mean, that's the way they're going to think. Same way with the downside. Traders going to be saying, okay, as long as 68 to 72 holds, I'm golden. We're coming back down. This is a bounce, but we're going to come back through this, and we're going to come down and start to test lower lows. So the trick is, while you are here and while you are participating, try to get something out of these swings. And then get out of the way when you go take your walk or go have lunch or whatever, and look for another trade. So best trade for shorts today clearly would be using yesterday's middle zone resistance, trying to come and get half gap and gap. One tick remaining, and oops, okay, so no big deal. But that one tick caused about a 5-point reaction. And that's what I mean by risk reward changes. So traders like Mike, who said, hey, I like buying, support. That trade is a very valid trade, despite the fact that the trend trade, morning after trend day, was a play to come in and get the half gap and gap. But the bigger trend play of going with support against morning after trend day, just as valid a trade in these smaller ranges especially. So learn to see this as sequence trading, and they are simply a reaction of traders taking profits at different levels. That's what I call sequence trading. Powerful method, because you can come in and find a trade almost any time. Within 5 minutes, say, okay, this is what I think is going on. This is what the longs are trying to do. This is what the shorts are trying to do. And I think X, Y, and Z is winning, and I'm going with them. Or I think it's neutral, and I don't want to trade at all right now until we get a better edge. Those are the choices. So don't make this complicated. We say, let's think of inside day. That means the low doesn't get broken. That comes first, that idea. and bounce back and see what of yesterday's range can be retested. That's what I mean by keep it simple.